Asia shares area down after Wall Street falls. Oil rises. Hong Kong Asian stocks side down in early exchange on Tuesday, with buyers taking their cue from an unstable Wall Street session overnight, while oil costs climbed following closing week's rout. Oil persisted to upward thrust, with traders nevertheless weighing worries over an monetary slowdown in opposition to challenge over misplaced Russian deliver amid sanctions related to the battle in Ukraine. A seam of tight deliver information strengthened the oil marketplace, analysts at Commonwealth Bank of Australia (OTC, CMWAY) said in a study's notice. Political unrest may curtail supply from more than one second-tier manufacturers, Ecuador and Libya, and then there's the G7's proposed fee cap on Russian oil. Early inside the Asian trading day, MSCI's broadest index of Asia-Pacific stocks outdoor Japan turned into down 0.7%. The index is down 3.8% up to now this month. U.S. inventory futures, the S&P 500 MNS, have been up 0.27%. Australian shares had been up 0.25%, at the same time as Japan's Nikkei inventory index rose 0.5%. China's blue-chip CSI 300 index became 0.4% lower in early alternate. Hong Kong's Hang Seng Index opened down 0.36%. On Monday, U.S. stocks ended a volatile trading consultation barely decrease, with few catalysts to sway investor sentiment as they met the halfway point of a year in which the equity markets have been slammed by using heightened inflation issues and tightening Fed policy. The foremost U.S. stock indexes lost ground after oscillating in advance within the session, with weak point in hobby fee-sensitive megacaps, which includes Amazon.com Inc. Nasdaq, AMZN, Microsoft Corp. Nasdaq, MSFT, and Alphabet Nasdaq, Google Inc. supplying the heaviest drag. The Dow Jones Industrial Average fell 0.2%, the S&P 500 lost 0.30% and the Nasdaq Composite dropped 0.72%. Oil expenditures rose as the Group of Seven nations promised to tighten the squeeze on Russia's budget with new sanctions that encompass a plan to cap the fee of Russian oil. U.S. crude ticked up 0.99% to $110.65 a barrel. Brent crude rose to $116.22 in line with barrel. Treasury yields climbed on Monday following capital and sturdy goods orders facts and as pending home sales surprised to the upside from the preceding month. The yield on benchmark 10-year Treasury notes ultimate reached 3.1847% on Tuesday, in comparison with its U.S. near of 3.194% on Monday. The two-year yield, which rises with buyers' expectations of higher Fed fund costs, touched 3.0974% as compared with a U.S. near of 3.123%. Also, the U.S. dollar edged decrease as opposed to most important competitors as traders weighed expectancies on inflation and interest fee hikes. The dollar index, which tracks the dollar towards a basket of currencies of different principal trading partners, became down at 103.91. Gold changed into barely higher. Spot gold became traded at $1,824.28 consistent with ounce. GOL.